Lesson number 13, first hour high and low and also Fibonacci levels. In lesson 13, you will learn how to trade using the first hour high and low and the Fibonacci levels of the first hour indicator for Thinkorswim. Okay, so this is probably one of my favorite indicators for the scalping, because what it does is it actually gives you levels visually that you know every other trader's looking at. Okay, and pretty much what they are, and let me walk you through how to first add them. Okay, you'll want to add them from our charts, okay, from all the codes that I give you. Save it. You'll want then actually just enter them both in, okay, double click so they come over here, and you'll need to make a couple of adjustments. To begin, 9:30 to 10:30, okay, and then you're going to do Fibonacci extension 1, 1.382, Fibonacci extension 2, 1.382. Again, show today only, you'll want to put yes. For this instruction, I just want to show you past days, okay? So that's why I have a note, but you'll want to do it for yes, okay? And then show Fibonacci extension 2, yes, okay? And then you'll go okay. And you'll actually do the same thing for the second one, but this time you're going to do 1.618, okay? And then again 1.618, and you'll want to do yes and then also yes, okay? Now, what it's going to show you is this. It's going to show you what this is from the market open at 9:30, from 9:30 until 10:30, there will be nothing on your chart. After 10:30, what's going to happen is it'll start to plot these lines, okay? The yellow lines are the first hour. And then so those are going to give you your high and low for the first hour of trade, okay? Now, these are regular session only, so this is what it's going to look like on a regular session, okay? So as you can see, the first hour from from 9:30 till 10:30, okay, you're going to start to it'll draw a line from its high to its low. And then these extra guys right here, the red ones, are the 38% retracement and then the 61% retracement. Okay, these are from this first hour high low, right? So if you actually took a Fibonacci, went from here to here, this will measure the 38, this will measure the 61% Fibonacci retracement. You'll be amazed how well these act as support and resistance levels, okay? So as you see, we kind of fell, came down, okay, and let me zoom in here, okay, and then so price actually fell below. As we rally back up, it pops its head, it fails. It comes right down to the 38% retracement, finds support, rallies, fails, okay. This is a great trade. And the way I like to trade it is the very first touch. After we've pulled back and we rally back to it, I love to put an order one tick below what this level is. So for today, it was 1972.50, right? So my entry would be a 1972.25. I'll use a two-point stop loss, and maybe I'll look for a point, 2 points, 3, just all depending on what the market conditions are doing, okay? But price comes back up, we fail, right? Come back up again, look at that. Boom. You could have made 2, 3 trades all day long, made your money. Then what happens is price comes down to the 61, look at that. Price came down and bounced, okay? I'll show you on the 1 minute chart so you can kind of see it on the smaller time frame of how it acts as support, right? Come back down. Again, all these things are the very first touch only. Okay, multiple touches, I don't like to play. It's only the very first touch. So price comes down, we rally. You could have picked up about 2 or 3 points on, actually, about 1.5 points, okay, on this. These are just more of a little scalp. It depends on market conditions. So now let's look at what happened yesterday with this, right? So we rally, come down, really the very first retest back up into it, right? We pull back. So you could have gotten at least a point here. Then, as we rally up into the first hour, right? Look at this. Price rallies, and then we pull back. Could have gotten another point there. Then we rally all the way up to the 38% retracement to the ticks. Stop there. You could have gotten a point or 2 points, 3 points, however much, depending on market conditions, right? Then price rallies back up. We come one tick away and we pull back, right? See how it acts as support and resistance levels, okay? So these are very, very strong and great trade setups with very high probability trades that work over and over and over, right? So let's look at this level, right? Come back, so we come down, okay? And a lot of times you could use them as a resistance on the very first touch, right? Here, we pull back right to the 38%, buyers step in. Pull back, come down almost to the 61% Fibonacci, buyers step in, right? Sometimes they'll miss it by a tick, sometimes they'll pierce it by a point or two. But again, you kind of go up to the first hour after touching this, look for that quick little short trade. Sometimes it'll work, sometimes it won't, but more times than not, it will work. Let's look at this day right here, right? Price fails, come right down, we bounce, right? We fail, come within a couple ticks, right? 2 or 3 ticks from the low, we rally. Touch it, rally, right? Touch, rally. Come down to the 61, we touch, and then we rally a little bit, okay? These could be used as smash and grab trades, quick little trades, but these are very, very powerful tools, okay? And you could trade this with anything, stocks, options, or stocks, any future, anything like that, because they're numbers algorithms are looking for, okay? And other professional traders of knowing what to look for. But again, to recap, the way I like to trade it is if we're actually going from one end to the other, I'll look to short the very first touch, or I'll look to buy on the very first touch sometimes, okay? Or if price comes down, I'll have a pending order to just buy me, pick me up, and look for a quick maybe 2 to 4 ticks on the trade. And then if we've actually get overextended from the low, I'll look to short the very first retest, okay, of it coming back up, because especially if we actually kind of bounce around, right, old support becomes new resistance. Now, if the market's strong, it'll blow right through these numbers sometimes, okay, but that's why we use our stop losses. So I hope this actually kind of gives you an idea of how to trade the first hour high and low, and also the Fibonacci extensions from the first hour high and low. Always manage your risk with these trades, but they're very high probability trades, and maybe use a 5-12 tick chart to look for that perfect entry too, okay? And what I mean by that is you could come down here and look for maybe the RSI, is there divergence forming, something like that, right? Let's pull up a quick RSI. Okay, and look at this, right? As we come up here, we make a double top, right? You actually have a lower RSI while you're making a double top. So there are specific ways to trade this that can give you the edge, okay? Same with on the downside. Look at this, right? So we make a low here, okay? Sorry, we make a low here. We actually have divergence on the RSI, and we get that quick low bounce. Again, sometimes the small trades will lean into big ones. Sometimes they're just small little bounces in the smash and grab trade. So always look at the market conditions and what's happening with the market conditions. So again, that's it for the first hour high and low, and also the first hour high-low Fibonacci retracements and extensions. Next up is going to be lesson number 14.